Welcome to the newest episode of the Rice Crypto Show. Today's guest is Mark Yusko. He is the founder, CEO, and CIO of Morgan Creek Capital, and he is also the managing director of Morgan Creek Digital. Before we get into it, take time to visit my website at ricetvx.com. There you can sign up for my mailing list so you can stay up to date on all things Rice. Once you've signed up for my mailing list, you will find links for my channels and socials towards the top of the website. Make sure you are subscribed to both of my YouTube channels, Rice Against the Grain and Rice TVX. If you want to support my work directly, as well as get early access, exclusive content for both channels, plus more, join my Patreon. I also wanted to share that I have recently partnered up with ITM Trading. So if you want to schedule a gold and silver strategy call to build your wealth shield and support Rice TVX, be sure to use my specific landing page that you see on the screen, and I will also include custom Calendly links and an 800 number that you can utilize to schedule your strategy call with the ITM trading professionals. And again, it is a way to support Rice TVX. I will include links in the video description for everything I just mentioned, as well as everything shared on today's video. Joining me on today's show is Mark OMG Yusko, and that stands for Old Macro Guy. He is the founder, CEO, and CIO of Morgan Creek Capital, and he's also a managing partner of Morgan Creek Digital. Welcome to the show, my friend Mark. How's it going?
No, thanks for the introduction, and thanks for having me. I think I may have to change my handle on Twitter. I like it.
I think it
my
works.
middle initial go with OMG.
Yeah, no, I love it. I even thought about combining it, the WOMG, which it was like Womunk. It didn't really make a real
That's all right.
sound,
But the OMG works. I like it.
Yeah, and when you mentioned that on my friend, a mutual friend, who you were on his show about a month ago, CryptoBlood interviewed you. And I'll put a link down below for that interview because that's a great conversation, and that's where you had mentioned the OMG thing, and I really like that because I got some questions I want to ask you that deal with the macroeconomic spectrum of where we're at today.
Yep.
But do you mind, for people that might be unfamiliar with who you are, kind of introducing yourself in your own words?
Sure. So quick background, although as many people who have seen me would realize I don't do short well. So I'll give the shortest version I can.
No problem.
I'm a left coaster. I grew up in Seattle, although now I've been in North Carolina longer than I grew up in Seattle. But still consider myself the left coaster. Ended up at school in the Midwest at Notre Dame, and then found my way into the investment business a little bit by accident. Went to work for an insurance company after grad school, and the guy who's doing investments retired. Did that for a number of years, managed bonds, then went to an equity shop run by a couple people out of Northwestern University back pre-PC. So we were doing computer screening on the big mainframe VAX computer at Northwestern and selling our wares. And then I got the call. So those who are college football fans would remember Lou Holtz had a lifetime contract at Minnesota, unless Notre Dame called. Notre Dame called. He went, had a great experience, won a national championship. I was kind of the same way. I was very happy working for this firm in Evanston, Illinois. We had $1 billion back when $1 billion was a lot of money. But I got the call to go back to the alma mater, work at Notre Dame, did that for 5 years as the number 2 guy, then had a chance to come down here to North Carolina and run UNC's endowment, be the number 1 guy. And then now a long time ago, 19 years ago, spun out on my own for Morgan Creek. We did primarily alternative investments, although I hate that term. I would say alternative to what? Right? There are stocks, bonds, currencies, and commodities. Hedge funds are just a combination of that. Private equity is just a combination of that. Real estate is just a combination of that. But at the end of the day, that's what we focused on. And then 5 years ago, 10 years ago, I kind of started down the crypto rabbit hole, but I wasn't smart. I just wasn't smart enough to really grasp what I had been handed by my friend Dan Moorhead at Pantera. So it took me, almost 5 years to finally snap. And in 2018, launched Morgan Creek Digital, and now have spent the bulk of the last 5 years focused on the digital asset ecosystem. We've raised a series of venture capital funds. We run a risk managed Bitcoin fund, digital asset index fund, and then have done a bunch of single deals around the space. So anyway, that's the shortish, although not short version.
No, that's cool. I mean, I appreciate you taking time to explain it. It makes sense. So you mentioned Dan Morehead mentioning Bitcoin to you. Who ultimately got you involved in crypto? Was it Pomp by chance?
Yeah, well, no, but Pomp certainly played a big role in one informing Morgan Creek Digital. But I joke. Look, I got introduced to Bitcoin the same month as the Winklevoss twins. They're multi-billionaires, and I'm not. Why? Because they were hanging out with Charlie Shrem in Ibiza, and I was with Dan in San Francisco. And he said, "Look, I'm shutting down my hedge fund. We had seeded his hedge fund 20 plus years ago. He was a macro fund. So he's one of the OMGs, one of the old macro guys like me and Tapiero and Novogratz and John Burbank. There's a whole bunch of us who kind of seen the light of crypto as old macro guys. And I said, why? What are you going to do? He says, well, I'm going to focus on Bitcoin. And look, in 2013, I was not running drugs on Silk Road. I was not a cryptography student. I didn't get Bitcoin. But he said, I'm also going to raise an infrastructure fund. Infrastructure, I get. I've been investing in tech infrastructure, most of my career for 30 years, made lots of money for investors and for my alma mater and for UNC, and did that fund. And that fund's great. It's up, 17x or something. But I should have put the money in the Bitcoin fund because that's up 350x. But I didn't. Why? Well, I hadn't done any work. And I was skeptical. And look, every really smart investor I've ever met starts skeptical of new ideas, but then does work and eventually, starts to believe in it. And that's where my pinned tweet is, great fortunes are created by investing in something you believe in before others even understand it. And you'll be mocked and ridiculed for your non-consensus actions, but it's totally worth it. So in 2013, I didn't get it. In 2014, I wrote a little bit to my investors. I kind of got it. I thought Bitcoin in particular was an interesting special situation investment, put 0.5% in. And I got hate. I mean, I had clients say they'd fire me. I had clients say I'm an idiot, go back and do your job. Like, guys.
In 2018, though?
No, that was 2014, first quarter of 2014, March 2014. I wrote one paragraph in a 40-page letter saying, I think this is interesting. The price was like $500. And look, over the next 6 months, it went to 178. I was like, oh, look, they were right. And then 6 weeks later, it was 1,000. I'm like, nope, they're not right. And in fact, my son graduated from Notre Dame in 2015. I said, go talk to Dan, get a job at Coinbase. And he went out, he talked to Coinbase, and he's like, Dad, I don't know, maybe this can be a big deal, but I'm going to go with KPMG. It's safe, gets me to San Francisco where he wanted to live since he was a little kid. And make a long story short, when Coinbase went public, he called me up and said, all right, fine, Dad, you were right, but you're not as smart as you think you are. Oh, do tell. I told you to go to work at Coinbase. It's like, yeah, but you didn't lever up the house and put all in Bitcoin. Like, you little shit. That is true. Okay, fair. So 2016, finally got some clients to put some money in, a little bit in BTC. Ethereum was just getting going. And did a little more Pantera, did some blockchain capital. And then in 2017, I met Pomp. And it's really funny. I had met Pomp not through crypto, but through Lyft. We were raising an SPV to invest in Lyft way back when. And Pomp and Jason were looking at it. And we met for like 20 minutes. So that was a nice guy. But then didn't see him for about 5 or 6 months. And I heard him on Patrick O'Shaughnessy's podcast. And it was short. It was only like 25 minutes. And I'm like, oh, guy's pretty smart. All right, I'll follow him. Followed him on Twitter. I was like, that's something I would say. Wait, that is something I said. I got to meet this guy. So I'm like, hey, Pomp, let's get together for breakfast. Breakfast turned into lunch, turned into dinner, turned into the next day. And by the end of 2 days, we're like, we got to do something together. So we came together, Pomp, Jason, and I, and formed Morgan Creek Digital. Raised our first fund in 2018, invested that. It's done actually quite well. He and Jason downshifted 2 years later to venture partner, and Pomp's gone off to do his media stuff, as has Jason. I brought in 2 new general partners, and so we've raised 2 more funds. Actually, Pomp and Jason and I raised Fund 1 and Fund 2, and then they downshifted. That's right, downshifted in 2020. Then I raised a third fund with 2 new general partners. We're getting ready to raise Fund 4. But Pomp and I still talk every Monday. Good friends, and excited that he helped me, and he describes it better. It's better coming out of his mouth, but it was funny. He said, Jason and I were looking for someone to partner with because, look, we were 2 guys who liked crypto, but were young and wearing black t-shirts, and no one was going to give us money. So he said, hey, let's find somebody who's old. Okay, I'll be old, who has some credibility in the traditional world. And they said, who can we talk to? Okay, there's Novogratz, there's Moorhead, there's Burbank, there's Yusko. Hey, wait, Yusko's in North Carolina. Let's meet with him. So
yeah, because I was going to ask you, like, Pomp was in North. I don't know if he's from North Carolina, but
he's from North Carolina. Yep, grew up in Raleigh. Went to Cardinal Gibbons high school here.
Moved to New York, then Miami.
Yep. And look, we had and are continuing to have a good run, and said collaborate on a lot of things together. But it was funny. He described it as, if you line up the old guys in TradFi and the young guys in crypto, they look across the river and are like, they don't look like us. We don't like them. They're not like us. But a couple of us kind of came to the middle from each side, and that's where some great firms like Galaxy and Pantera and others have gotten together. I mean, Dan found Joey, although Joey's going to go do his own thing now. But it was that merger of old and young, because something I believe, and I can actually back it up with data, all great things, all great innovation is created by young people. And it's been true throughout millennia. And it's partly because energy levels, partly because naivete, right? Young people don't know what they don't know. They don't know that something won't work. They don't know that you can't do it that way. Problem with getting older is you get inculcated with bureaucracy and rules and custom and common sense, which is not very common most times, or maybe not very sensical sometimes. So it's that sort. You think about Mark Andreessen, right? When he invented the browser, yeah, it was great. He invented the browser, changed the internet forever. But it wasn't until he partnered with an old guy, Barksdale, to create Netscape to get it rolling. And same thing with Google, right? Larry and Sergey were amazing, but it wasn't until they brought in some heft and some people on their board and to help them. And I think it's that merger of generations that really helps.
That makes sense, man, and I really appreciate you taking the time to explain it that way. And before we get into like some serious questions about what's happening as far as the macroeconomic climate, questions about regulation stuff, what I wanted to know is, right behind you, you have that buy Bitcoin. Yeah, let me pull it back up real quick so you can point it out. And what I'm curious about, and I want to go ahead and pull up a tweet real quick. Let me get it right here. This is from Jameson Lopp when it came out.
Yep.
But the Bitcoin sign guy basically was able to hold this thing up during it was a Capitol hearing. It was a
Fed testimony. Yep.
Fed testimony.
Fed's annual testimony or semi-annual testimony to Congress. Yep.
So yeah, it got a lot of coverage. Cool guy, very cool concept. But what I was curious about was, is that the original piece?
So here's the thing. It's an original. It's not the original. I met Christian at Bitcoin conference, and I tried to talk him into selling me the original. And he basically said, look, I appreciate that. And, I could sell it, but I think it should be in a museum. And I said, well, okay, that's admirable. And I'll put it in a museum, my museum. And I'm happy to share it out with other museums, but okay. And he said, well, no, I really don't want to sell the original, but I'll make you an original. And so it is an original. Christian made it. It is this, the same kind of pad. And you couldn't tell the difference between them.
No, that's why I had to ask,
And
because
it's got his signature and a number. And so, but it is not the original.
What number does it have?
It's number 9. That's my lucky number. So,
Okay.
So I asked
Were
him
you
for
the
number
9th
9.
one, or
and he
you chose 9?
Yeah, I chose 9. Yeah.
Okay.
I think since he and I met, he may have sold a couple others. But
That would. I mean, it makes sense. But I mean, I know how much you like Bitcoin, and you displaying it like that, and then me looking at it and actually looking at what he held up, it really made me question if you had the real thing. That's why I had to ask.
No. And as I said, I appreciate the conversation. And look, I admire Christian for doing it. It made a big splash at the time. The fact that we're still talking about it years later is cool. And the reality is the setting was so perfect, right? Here is the Secretary of the Treasury, actually she was the head of the Fed at the time, talking about ridiculous fiat Ponzi policy. And he's saying, hey, I got the solution right here. You want to protect yourself from these people. And because these people don't care about you and me, they care about themselves. And the whole point of fiat is to extract wealth from you and me and everybody listening to this podcast and give it to these people. That is why the Fed was created in 1913. That is why it makes the decisions it makes every period at their meetings. It's why it's owned by the banks and the wealthy elite families around the world. It's not federal. It has no reserves. It's not a federal agency. It's not backed by the government. It doesn't support anything other than its owners, which are the banks and the wealthy families.
Yeah, 100%. And when I was listening to that podcast that you did, the show with CryptoBlood, you were talking about a 1910 book. And I was trying to look up the book. I was looking up information about vampire octopus. I was looking at cracked it. I couldn't find the actual book. Did you figure out what the book was called?
I haven't looked for a while, but let me see if I can grab it here while we're talking. But it is the Aldrich Plan.
Well,
and
can you see what I have up on screen by chance?
Yes.
Because I have something up there it's not the book, but it's just talking about the Aldrich Plan from 1910. And this is like a precursor to the Federal Reserve Act. And you guys also talked about G. Edward Griffin's Creature from Jekyll Island, which is a book that I definitely encourage people to read. I've had the pleasure of interviewing Mr. G a couple times, and he'll be back on in a few more weeks. So I'm looking forward to having him back on. It'll be my 3rd time with him. And
I will find it and send it to you because actually here it is. I think
it was so hard to look up. I tried a couple different browsers in a couple different combinations.
Here it is. So it's this guy, Alfred Crozier. And it's called U.S. Money versus Corporation Currency, the Aldrich Plan, Wall Street Confessional, Great Banks Combined, Alfred Crozier, Crozier. And I love this vampire squid that's basically sucking the money out of the banks and out of the corporations and people's wallets and depositing it into the banks. So, that's what fractional reserve banking is all about. It's about extracting wealth from the masses to the few. And that's okay if you understand it and you opt out with a portion of your wealth into something like Bitcoin to protect you against, the fiat, what I call the fiat fiasco.
Fiat fiasco. That is kind of almost an understatement in a lot of ways, but it definitely is a good describer. Now, since we're kind of already talking about the Federal Reserve, one thing that I wanted to ask you, because I was doing some research on this several years ago, and a lot of people talk about the Federal Reserve being the 3rd central bank of the United States. And there's been some research that I've seen where there was actually a bank that was chartered prior to, it wasn't authorized by Congress, I don't believe.
So here's the thing. So the Fed is the first.
It was before the
bank.
It was before the Constitution. So you had the first central bank of North America before the Constitution. Then you had the Bank of the United States. and then the second Bank of the United States, and then we go
Yes.
into the Federal Reserve.
Yeah. Okay. So that and now you're going a step further back than I looked. So I knew the history of the first national bank or first bank of the United States had a 20-year charter. Then it got renewed, and the second national bank. And then when it came up for renewal, Andrew Jackson, basically because of some money, the way it always works, regulations follow money. So some moneyed people said, no. We don't want a national bank. We want free banking. And basically we went through I don't know if it was 30 years or some odd period where there was no central national, or when there was no national bank, and every regional bank was issuing their own money. Texas had its own money. Corporations like Procter and Gamble had their own money. I mean, it was crazy. And
that would have been like mid 1800s,
1840s to 1860s. And we had one of the worst depressions. It actually was worse than the Great Depression. It was the biggest depression we'd ever seen. And that convinced them to end the free banking era and go back to a national bank. But it wasn't until what happened in 1913 is the result of actually what happened in 1907. So in the 1900s, I don't remember exactly when, they passed a law that allowed trust companies to compete with the banks. And, J.P. Morgan, John Pierpont Morgan, was, the biggest banker, or bankster, as I like to call him. And he didn't like this law. And one of his best friends was John D. Rockefeller. And John D. Rockefeller's father-in-law was Amory Aldrich, who was the most powerful senator in Congress at the time. And as it goes down, there was a trust that was really starting to take a bite out of JP Morgan's business in New York called Knickerbocker Trust. And JP, as well-connected people can do, spread a little rumor that they might not be solvent. And back then there was no social media. There, it was just what you read in the newspaper or heard on the radio. And there was a run on the bank. Like if you go to Wikipedia and look up Knickerbocker Trust, there's a famous picture of these people in their umbrellas and their suits and ties and hats and dresses running to the bank to withdraw their money.
Right, the famous bank run photos that they use when they talk about bank runs.
Every time you hear a bank run photo, that's the picture.
Right.
And so basically, JP said, I like a little competition. And so caused a bank run. All the banks basically had to shut down. It was literally like the scene from It's a Wonderful Life where Mr. Potter is saying, yeah, I'll bail out the bank, but then I'm going to own it. And JP Morgan and John D. put up $25 million of their own money and basically guaranteed the banking system in exchange for buying up all the assets for pennies on the dollar, which interestingly is exactly what FTX tried to do. The difference was JP Morgan actually was a rich guy. Sam was a fraud. So, but he tried the same playbook using the 1907 Trust Act to try to invoke the same kind of powers so he could buy the assets for pennies on the dollar to bail his ass out because he had lied about his losses on the Luna collapse.
And that situation is insane. If we have enough time, I definitely want to ask you what you think about that. But when it comes to the previous banking efforts, they had 20-year charters. After the charters, it ended. We never renewed it. And then with the second one under Andrew Jackson, from what I understand, we also paid off our national debt. And
I think that's right.
And then he ended the second attempt at the central banking. Then we have the Federal Reserve, 1913, which went through a couple different incarnations prior to actually getting passed because there's so much.
It took 6 years.
Yeah, so much. And they even had to change the name, kind of Aldrich out of the picture. A lot of different things when it came to it happening. But that was 1913. And now we are in 2023, 110 years later, where the other two, after 20 years, their charter ended. Why in your opinion, why haven't we come up with the possibility or suggestion of ending their charter?
No, it's a great point. I the primary reason is it's not a chartered bank, right? It is a private corporation, similar to the models that were created by the Rothschilds in the 1600s in the Netherlands. That was the first central bank. And basically what a central bank is, right? It's a private corporation owned by wealthy people to finance whatever they want to finance. So for the Rothschilds, it was to finance war. And that's how the Netherlands, think about this. The Netherlands was the world reserve currency for about 70 years. How is that even possible, right? I mean, well, it's possible because you had a very wealthy family that financed wars that allowed them to take over France, who had taken over Spain, who had taken over Portugal, which was the original world reserve currency. And then half the Rothschilds moved to England and they set up shop as the Bank of England. So that was the new central bank. And then the UK became the superpower and the world reserve currency. And then we broke away and we basically borrowed the same model financed by some of the same families. Like if you look up the owners of the Fed, it's unfortunately a bunch of European families, not, good old Americans. So it's not a nationally chartered bank like First National Bank or Second National Bank or Third National Bank. But the one I always think is funny is Fifth Third. Like who thought that?
But wasn't it chartered like the other two, though?
I don't believe so. I think it was created through an act of Congress, and it was given certain freedoms. But again, it's not a member bank. It's not insured by the FDIC. It doesn't have deposits. It is simply like I said, it's a private corporation owned by a small number of banks and families, and it was granted the authority to set interest rate policy, which, look, price fixing in any form is bad, right? Rent control, minimum wage, any sort of price fixing, I believe, is wrong. The market should determine prices.
Right.
The market is way better than human beings. And in fact, this is an interesting question. I've never thought about this, but someone asked me this today. He said he's been trying to figure out for the last month how the vote is actually cast at the Fed, right? Every time they meet, they make a decision, but there's never a statement on, like, the Supreme Court. When the Supreme Court votes, it was whatever it was, 5-4 or 6-3 or whatever, and there's a dissenting vote and an opinion. No. And he said, do all the voting members have a vote, or do they get to voice their opinion and the chair only gets the vote? I couldn't answer the question. He couldn't find the answer. And it's really interesting because the dot plot says they all get a vote on what they think the path should be. Okay. Because each dot is a person. Okay. But do they actually get a vote on the actual decision? 25 basis points, 50 basis points, up, down? I actually don't know the answer.
That's a good question. I mean, I don't think that we really know. I mean, is it public information as to who the owners of the Federal Reserve are? Is it just kind of like assumed
Look,
some of these
probably was public information at one time. It's been pretty well scrubbed at this point. I think it's pretty hard to find.
You mentioned trusts, and I do a little bit of studying of law, some stuff that people may consider to be pseudo law, but a private irrevocable common law trust is, I think, what these rich families are utilizing. And some of these trusts have been in existence, and that's the correct name, I think, but they've been in existence prior to the United States. So JP Morgan, maybe the way that they set this thing up under a trust structure protects the people within the trust. And that's why the information is not given out publicly.
That wouldn't surprise me at all. And, because there's a great example of that. There's one of those trust structures here in Chapel Hill that it's interesting. It was the family that basically built the railroad from New York down to Florida, and they own the Breakers Hotel down in Florida, and they endowed the school here, and they have a big foundation, and they set it up in one of these irrevocable trusts with JP Morgan as the manager, which can never be changed. It's actually hard coded into, so no matter how crappy they do performance wise, they can't be fired. Now, some number of years ago, I don't remember if it was 10 or 12, some number of years ago, they changed that rule. So now no one can set up these types of trusts, and you can't have a single trustee that can never be terminated. And they're because they finally realized this is ridiculous. You're giving too much power, too much secrecy, too much control. And so they did finally change the law. But you're right, for 100 plus years, it was, and my guess is you're right. That's probably how it was set up.
Yeah, no, it's interesting. It wasn't even something I was intending on asking you, but based off what we were talking about, it just seemed to make sense.
Yeah, it does.
So we are at a very, very interesting, pivotal point in history and time with what's going on as far as our fiat fractional reserve banking system, as far as the entire macroeconomic climate around the world.
Yep.
Because every other fiat currency is basically weighed against the dollar. So when the dollar is strong, it's really affecting other currencies. It affects markets. Since you're an OMG old macro guy, what are your thoughts, your overall thoughts on where we're at and what's ahead?
So a couple of things. So one, the dollar, which interestingly is came from the Rijksdollar, which the Rijksdollar was the Netherlands currency. So it's like, well, why did we name it after something from the Netherlands and the Rothschilds? Well, because we're all in bed together. So the dollar has an interesting history in that if you look at the history of currency, there have been 775 paper currencies in the history of the world. 3/4 of them no longer exist, right? They literally went out of business. The oldest today is the pound sterling. And as the name implies, a pound of sterling silver used to get you 1 pound note. Now take you 174 pounds of silver. So a little different.
Yep.
So what's interesting is that's inflation, right? That's the theft of your wealth over time by devaluation of the currency. And so from 1776 to 1913, pre-Fed, a dollar was worth $1. Now, it had a little fluctuation around the wars and around that free banking era, but it's pretty much $1 is worth $1.
Like a stable coin.
Yeah, like a stable coin. Yeah. But from 1913 to today, $1 has turned into 3 cents in terms of purchasing power.
Right.
And like I took my son-in-law to lunch today. 2 of us for lunch in Chapel Hill, not in Paris, France. $50.
At a regular kind of place.
Tacos. We had tacos. No, we had tacos. And I had water, right? The guac, a side of guac, was $7.
Wow.
Like, again, not in New York City, not in Paris, France, in Chapel Hill, freaking North Carolina. Crazy. So I'll take PB&J tomorrow. But the key is the dollar has been on this descent. Why? Well, the myth of inflation, right? They tell us that inflation is good for us.
It's a hidden tax too, and people don't realize that.
Well, no, it is a tax, but why would inflation be good for? Why would a project that takes half of my purchasing power away over 30 years be a good thing, right?
Well, who's it good for? It might how you want to
right?
reverse the question.
But to answer your question, what's happening with the dollar today? So the dollar became the world reserve currency in 1944.
Bretton Woods Agreement.
Yeah, Bretton Woods. So basically, the UK had been the world superpower. They were the dominant superpower in, coincidentally, 1913. Just a coincidence, maybe. They invaded Mesopotamia. They incurred a bunch of debt. Okay. They lost. They defaulted. And the pound sterling collapsed. The dollar ascended with this new, Federal Reserve Bank that we had. And 30 years later, not 30 years, 31 years, we became the superpower and anointed the world reserve currency. Now, it took another almost 30 years until 1971. Interestingly and curiously, the same year that WEF was incorporated. It's just a weird coincidence.
So many coincidences,
Yeah, so many coincidences. We cut a deal with Saudi Arabia where we said, all right, we'll close the gold window. We'll go off the gold standard and we will protect you at all costs. No matter what you do, cut people's hands off, do whatever you want. We will protect you. Okay. As long as you price all transactions in oil in dollars globally. Okay. And
Now,
that
real
was
quick,
awesome.
Mark, when this happened in 1971 in Nixon shock, were we taking off the gold standard and then we made a deal with Saudi Arabia, or was the Saudi Arabian deal kind of like setting up? We don't
I
know.
will argue that WEF, Saudi, and gold window all were part and parcel.
Okay.
I will argue, but that's just my opinion, right? People can have different
We're just
opinions.
speculating here.
I think it's an interesting coincidence, right? People say, oh, well, no, the actual deal wasn't until 74. Fine. It's kind of like the Aldrich Plan, right? It was hatched in 1907. It took till 1913 to actually get, approved in Congress because it lost a couple of votes, to your point. Does that mean it wasn't happening? No. So 1971, all this stuff happens. And we go down this path that today, 60% of oil transactions around the world, trade, 60% of trade around the world is priced in dollars. A lot of that's oil, but 60% of trade priced in dollars. Only 8% of trade is with the United States. So why are all these other countries using the dollar? Well, we created a bunch of institutions to go out and lend them money, right? World Bank and IMF. And basically we dollarize these countries. And then we have a plan where we misplace billions of dollars, like physical paper dollars, $100 bills. We lose them. Like, do people know that 2 trillion with a T went missing? And the office that was doing the investigation happened to be on the wall of the Pentagon that got blown up in 9/11.
On a specific date in September.
On a specific date.
That's after the
2001. 10th. That's just an astonishing coincidence.
All these freaking coincidences.
It's an astonishing coincidence. Now, I should probably not talk about this because the black hats are going to come into my house. But look, the reality is, if you disagreed with the plan, you disappeared, right? There's a guy in Iraq who said, no, I'm going to price oil in euros. Disappeared. You had a guy in Libya who said, I'm going to price oil in gold. Disappeared. So, look, violence is how you maintain a fiat standard. And we've been pretty good at it for a long time. So that's fine. So now here we are today. So we get to 2000. I'm sorry, we get to 2020. 2020 was bizarre, right? Bizarre, right? Yeah. We weaponize the flu, literally, right? Take a flu bug and we call it something else and we make everybody afraid of it. And we lock down the whole world. And we allow this group of people called MMT proponents, modern monetary theorists, I call it modern monetary idiocy, to somehow think it's okay that we could double the money supply. We doubled the number of dollars in existence over an 18-month period. So we've been a republic for 247 years. Half of the money was created in 245 years, and the other half was created in 18 months.
Right. And people are wondering why things cost so much and why inflation is going up.
Yeah. So wonder why lunch cost me $50 or
exactly.
Why Zillow says my house has gone up, 50% in the last 12 months. I'm like, my house didn't go up. My house didn't grow. It didn't get more efficient. It actually wore out. I just had to fix some plumbing a minute ago, or an hour ago. I mean, so no, the money got worse. And the money gets worse. And we say, no, the dollar's really strong last year. I'm like, well, no, the dollar was strong against the yen and the euro. That's what
against all the other fiat currencies.
The other fiat currencies, which are destroying themselves faster, right?
Yeah.
Look, as great a money printer as the United States is, we are pikers. We are amateurs compared to Kuroda-san in Japan.
Yeah,
that man knows how to print money. Look at the Japanese money. Just pull up not you, but all these people listen. Pull up the chart of Japanese money supply over the last 30 years. It is astonishing, but it's the only way out, right? They have 226% debt to GDP. They can't pay back the debt. They can't even service the debt. The only hope is to devalue it through inflation or devaluation of the currency. So I will argue that all of what we see as inflation, it's not inflation, it's currency devaluation. Currency devaluation is interesting. It's an accelerated form of tax, right? Inflation is the loose form, the one that's invisible, right? People don't really pay attention to it because it's 1-2% a year, no big deal. When you take half in an 18-month period, now we're getting serious. That is modern monetary theft, MMT. And so now what we're seeing since October, suddenly DXY is going down. Wait, suddenly the euro is higher, the yen is higher, the renminbi is higher. Well, what happened to the strong dollar? Well, people realized that it's not stronger. We printed more of it, so the value of it has to go down. And ultimately, if creating wealth was as simple as printing money, then everyone would do it, right?
Yeah.
I would print money, you would print money, and that's what free banking was. Everyone, states, companies, people tried to print their own money. That doesn't work. The only thing that creates wealth is innovation and business building and commerce, trade. And so the whole movement against globalization, the movement to lock people down, have 15-minute cities, all this stuff, it's not coincidence, it's not accident. It's all related to command and control and siphoning the wealth, right? There's a reason that we have the greatest wealth and income inequality in the history of mankind right now. There's a reason.
It's by design, 100%.
It's by design. And here's the thing. Everyone says, well, why do you hate rich people? I don't hate rich people at all. I think Jeff Bezos is amazing. Love him. Love him. I don't love his personal life, but he built a business that now employs 5 million people, created 50% of the new jobs in the last 6 months. Just let that one sink in for a second. Everyone else is shrinking. He's still growing. Love that. That's innovation. That's wealth creation. Okay. I have 2 nephews, and I don't mean this. It sounds bad because they tried to go to college. It didn't work out for them. And that's not a criticism, right? That's just, but they are doing great. They're making I ever made in my 20s because they built a little business that tapes lines on the floors of Amazon warehouses so the robots know where to go. That's
Smart.
awesome.
Doesn't sound like a lot of work.
That's awesome.
Yeah.
I mean, this is awesome. But that's innovation. That is creativity. That's how you create wealth, not by printing money. So it's a long, long, long answer to say, as an OMG, the macro is very bad, right? Economic growth is slowing. Money printing is accelerating. That is a lethal combination for wealth. Not if you're an owner, right? If you're an owner of assets like real estate and stocks, you have the appearance of things going up. And I say appearance intentionally, because here's the thing. Everybody says, oh, look, stocks are making new highs again. Like, okay. Only because you denominate them with toilet paper, right? You denominate them in the dollar. If you denominate them in money, gold, you're dead flat since 1996. If you denominate in Bitcoin, you're down a lot. Now, that's not 100% fair because the early days of Bitcoin aren't really fair. It was a science experiment. It was too illiquid. But the last 10 years, totally fair. That is a totally liquid monetary alternative. And look, and money is an asset that exists in the absence of liability. There's only one in the whole world. That's gold. The second, I believe, is Bitcoin, because Bitcoin is digital gold. It has all the elements of gold, scarcity, durability, but Bitcoin is more portable and more divisible than gold. And therefore, I think it's a superior reserve asset. And if you think about it, all the other currency in the world that we think of as money, right? Dollars are not money. Renminbi is not money. Rubles are not money. They're currencies. They sit on top of gold. Gold is the base layer of all money. And then debt sits on top of that. And debt's not evil. I like debt to a point, but currency is just another form of debt. And JP Morgan, who I'm not a really big fan of, but he said it best, right? Gold is money. Everything else is just credit. I lost you.
It's because I muted myself. I apologize. Since you said that, why do you think that all these banks around the world are buying up and accumulating gold?
Because they're smart. Because, again, they understand how networks work, right? A monetary network has to have a base layer. The internet that you and I are using right now has a base layer, internet protocol and TCP/IP. Okay. Gold is the base layer of money. So these smart central banks around the world are saying, all right, if I want to have more wealth, I have to have more base layer money that then I can expand through appropriate debt on top of that through expanding my monetary base. And, the bad central banks don't have the gold, so they don't have the base layer. So they end up with hyperinflation. So places like Turkey and Argentina and Zimbabwe, they try to print money, but I have in my office on the other side of the house a 100 trillion Zimbabwe dollar bill.
Yeah, that's
100
insane.
trillion, and it wouldn't buy a loaf of bread.
Right. That is insane. That's just crazy. So we're recording this on the 8th of March, and we have the next FOMC meeting on the 21st, 22nd, and 22nd is when they're going to be giving out information as to what they're going to do with interest rates. I had said the last time in January that I figured that they were going to do 50 basis points when they did 25. I've heard some things about reacceleration of inflation. Projections say that they have to get interest rates up to 6.5% is what they're kind of calling for. Under the table, sort of, not really saying that completely publicly, but saying that they've tried running different simulations and models, and that's what it's pointing towards. What do you think? What do you in your perspective? What do you see the Fed doing this year, and do you see a pivot at some point?
Here's the thing. I've been pretty good, actually, and I, again, shouldn't break my arm, pat myself on the back, but I'd actually been pretty good for a number of years figuring out the Fed. Last year, horrible. I mean, like the worst ever. I really didn't believe they would go through with 11, 12 rate hikes in terms of 25 basis point increments. I just didn't think they'd do it. And because I thought too many things would break. And look, the stock market did break. The bond market did break. You had the worst year for the 60-40 in the history of the markets. That's 140 years. It's pretty bad. But the housing market didn't totally collapse yet. I think it's coming.
Yeah, I think so too.
Commerce didn't break completely. The jobs number, which is fake.
Well, commerce is declining, though. They said that there was that holiday spike.
It's definitely declining, but it didn't fall out there's just a little thing.
People are still spending money. Yeah.
Right after lockdown, my wife kicked me out of the house. I work for a financial services company, and we were deemed whatever was important. I can't remember the term. There's some term.
You were allowed to stay open.
You could, so it was hospitals and restaurants and financial services, like how we have anything to do with hospital anyway. But so I would drive to work, and it was awesome. I mean, there was no one on the road, and I had this one left turn across 2 lanes of traffic coming into Chapel Hill. This morning I sat there and I started timing. It was like 4.5 minutes, just people coming in, and it's like, holy shit. Now that means business is good for the hospital, which is definitely true. Business is good at the university, right? And there's obviously a lot of stuff going on in Chapel Hill. So commerce is happening for sure. But to your point, it is slowing, and it's definitely, and activity is slowing, but the prices are higher. It's like they report retail sales, but they don't adjust for the fact that gasoline prices are higher, or the price of lunch is higher. Or they also don't adjust for population growth, which is silly. So all these numbers, that they report, like the employment stuff. Employment doesn't reflect the fact that they take people out of the workforce when they turn a certain age, despite the fact that some of them are still working. It doesn't take in the fact that half of the jobs that have been created in the last 2 years are from the birth-death ratio, which is a formula that has nothing to do with reality. I mean, look, we live in a world where they know exactly to the person how many people paid payroll taxes this week. ADP publishes the number on every Wednesday. But the BLS, take the L out, the BS doesn't do that. They use this thing called the birth-death ratio, and they say, well, this long into an economic expansion, we should have this many jobs formed and this many die. Well, we had record bankruptcies last year. There was no net birth of companies last year. No way. But they created over 1.5 million jobs out of thin air, out of a number that's from 50-year-old technology that has nothing to do with reality. And so you can create this narrative that everything's fine, but it's not. And so I look at it as I missed the fact that they would keep tightening. Like, why do they keep tightening? Mark, you're an idiot. And I just had this epiphany the other day. Like, oh my God, am I really that stupid? I have known, right, my whole career that the Fed was neither federal nor had any reserves, that it is not a bank. It is not creating interest rates for the benefit of the masses. It is creating interest rates to enrich the banks. So why did they hold interest rates at zero for so long, right? The global financial crisis was over in 2010. Why did we have zero interest rates for 6 more years? Why? Pretty simple. Actually, no, longer than that, 8 more years. Why did we have zero interest rates? Because they were reliquefying the bank balance sheets because they could borrow from the Fed for 25 basis points. They could invest in treasuries at 2 or 3% and lever that up 11, 12 times. That's risk-free. JP Morgan, for multiple years, had 0 negative trading days. Now, I don't know if you've ever tried to trade.
I have.
Having 0 negative trading is impossible. It's impossible.
Unless you're manipulating the market.
Unless you're manipulating the market or you're not trading, right? And they weren't trading. They were borrowing from the Fed and buying treasuries. That is a riskless trade. And so what happened is now the banks are sufficiently liquefied. So now how did the banks get super rich? NIMs, net interest margin. If they can pay you and me for deposits, 1, because they haven't gone to 4 or 5, right? They've gone to 1, maybe 2, but you can now loan at 5, 6, 7. My mortgage, I hate to tell this story myself, but 10 years ago, I did an adjustable rate mortgage and I just totally lost track of it. 10 years, a long time. And I got a notice the other day that my rate went from 3.75 to 7.75.
Oh, wow.
That's bad. That's bad.
Yeah.
So, and I will fix that, but, and that's on me for not paying attention, but that is where we are. So if they can lend at 6, 7, even approaching 8% and pay depositors 2%, that's hugely profitable for the banks. So if you look, JP Morgan stock's been going like this lately. The bank stock's been going like this. Greek bank stock's been going ballistic. So it finally hit me. They're manipulating bank earnings because that's their job. They're owned by the banks. So I actually think they'll lean into this higher for longer. And until something really, really breaks in the economy, the banks are like, wave it in. And the one thing it does do that I will give them a little bit of credit for is capitalism needs positive interest rates. Negative interest rates that we had for a number, that doesn't work. That is not capitalism, right? That is socialism. Right. That is communism. You need positive interest rates that create the incentive to lend and borrow and transact. And so in normal world, interest rates have ranged between kind of 2% and 7%. And we had the one outlier of the Volcker where he was double counting interest rates because of the way they recorded mortgage rates and home prices. And so everyone says, oh, he broke the back of inflation. No, he was just double counting and making mistake after mistake after mistake after mistake, raising it all the way to 21%, literally crashed the economy. Like the sign in Seattle where I grew up was, the last person to leave, please turn out the lights. It was
Mm,
horrible.
wow.
Bad recession. And,
That
but
was late 70s, early 80s?
yeah, late 70s into the early 80s. So the 81, 83 recession. And, but it got better and we all survived. And I think the same thing's true. But if you look at history, we have a 7-year business cycle. And when rates get up towards 7%, things slow down and then they have to cut. And when they get down to 2-3%, they accelerate. And then you have to raise to slow things down. And you kind of do this snake in the tunnel. And that's where we were. But when we went to zero after global financial crisis to bail out the banks, what they should have done is shut the bad banks down. They should have sent people to jail. No one went to jail. It's impossible that no one went to jail. But no one went to jail.
Yeah.
We got a coder who wrote some code that some other people used because it was open source, sitting in jail. That hurts my brain.
Oh,
right?
the Silk Road situation compared to FTX is a good comparison too. I mean,
Yeah.
it's our system is just
Yeah, we've
broken
got a
corrupt.
life in prison and a guy at his mom's house.
Yeah.
watching
And I've met Ross's mom. I've interviewed her.
Oh, she's amazing.
Yeah, she's great. Lynn Albrecht, great people. Yeah, I mean, it's a travesty. It really is. Now, as far as the Federal Reserve with this on the 22nd, what are you anticipating that they're going to do, like with this meeting and the next?
It's a tough one. Look, they're jawboning that they're going back to 50. So that wouldn't shock me. Now, are they jawboning to go back to 50 to surprise and do 25 and try to juice the market? That's certainly possible. I think it's probably one of those two. You asked the question, do I think they're going to cut? If you had asked me 6 months ago, I said, oh, absolutely, right? Things are going to be so bad by first, second quarter. Look, I still think GDP this quarter is going to be negative, but it looks like they juiced the inventory numbers just enough to get us to positive. And we had a really warm winter. So it's possible that we don't go negative. But I would have thought that they'd already be talking about cutting. But now, no, I think this is all about expanding NIMs, enriching the banks, and really doesn't have anything to do with inflation. Inflation is totally transitory. By the end of this year, inflation is going to be probably sub 2% because oil price is going to be flat over that period. Used car prices will be flat over that period. Shelter will start to recover and start to crash as real estate prices start to roll over. So I really think this is more about bank balance sheets this is about bank income statements. So from 2009 to 19, it was about bank balance sheets. Now it's about bank income statements.
That's interesting too, because I was listening to Gregory Mannarino. I'm not sure if you're familiar with him, but he was
Sounds familiar. Yeah.
He's got a YouTube channel, but he was talking several months ago that if the Federal Reserve really cared, or even just central banks in general cared about the inflation, one thing that they could easily do is to bring back at least a partial requirement for the banks, reserve requirement, where it's now dropped down to zero.
Shockingly true.
Because they would
never going to happen.
You would have to pull cash out of the system and back into the banks, which would, I think, have more of an effect on the inflation than the interest rates. So obviously they don't care about the inflation, because this is the problem that they created by design.
Well, but here's the problem. The inflation didn't happen because of the Fed, right? The inflation happened.
It didn't happen because of printing up 50% of the money supply no.
That's the devaluation of the currency. The inflation that we're measuring happened because of the lockdowns, right? Okay. The lockdowns caused oil to go to zero. Actually went negative.
Negative, yeah.
Couple of days, right?
That was crazy too.
And then it stabilized at 40, but then it went from 40 to 120 as things reopened. That's not real, right? It was 120 3 years ago. It was 120. So over the 3-year period, but over that 1-year period, oh my God. And then used car prices more than doubled because you couldn't get chips because of the bottlenecks of supply chain, because of COVID lockdowns in China. So all of that CPI, which is a lagging indicator and really bad, is based on stuff that's already happened. And look, how many interest rate cuts are going to change the price of oil? None. It's what Saudi decides. Saudi will decide what the price of oil, because they'll decide how much to cut, right? Biden tried to go to Saudi and try to get him to cut production. I'm sorry, to increase production to get oil prices down before the election. And they said, go pound sand. We're now buddies with Russia. And what did he do? He sold out of the SPR to get oil prices down before the election, because there's a perfect inverse correlation between gasoline prices and presidential popularity. So how many rate cuts are going to change the price of wheat coming out of Ukraine? This doesn't matter. How about natural gas prices in Europe? Nope, that's just weather. And we had good, warm weather, and then they blew up the Nord Stream pipeline too. But the reality is, Fed policy doesn't impact any of those things. All Fed policy does is change how profitable banks are. Because have you ever borrowed at Fed funds?
No.
I never have. Just doesn't impact my life.
Right. No, I get that. I do. All right, man. Well, I definitely want to be respectful of your time. We're right around the hour mark. I wanted to ask you your opinion about Bitcoin, crypto, precious metals, gold, and silver. I see the parallels. I'm one of these guys that definitely says that you need both precious metals and crypto.
Oh no, of course. Look, precious metals are awesome because they're physical, they're tangible, right? You can have them in your hand, you can have them in a vault, and there's a role for in every portfolio for precious metals. The problem with precious metals is the price can be and is spoofed or manipulated, particularly by JP Morgan. JP Morgan, actually, this is not like me accusing them.
No, they've been in trouble. They've been in trouble for this, right?
Yeah, they paid $1 billion fine last year, but their response was, we made 20 billion, we pay $1 billion, cost of doing business. So we're going to keep doing it. So until somebody stops them, they're going to keep doing it. So the problem for gold is gold should definitely be, $3,500. Chris Wood, who's an amazing writer out of Asia, has been talking about this for years, and he's got a perfect analysis of why gold should be $3,500. It should, but it's not. And it's because it's being spoofed. So at some point, I do believe that will be good, but I believe there's a role for physical gold, coins, bars, whatever, and silver too, in portfolios. So I like them. I actually love the gold miners and the silver miners, but I every time I've tried to own them in the last 2 years, it's just been heartbreak because they're wildly undervalued. They're generating incredible amounts of cash, but because prices are being held down, they just can't get a bid, and there's no natural buyers. At some point, those could double easily. I mean, like without even trying hard, they could double. I just don't know when. Then now seasonally, April to September is a really good time for gold. I think those are the exact months, but seasonally there's an interesting time coming up. Then crypto, look, to me, everyone, and I do mean everyone, should have crypto in their portfolio. Why? So you should have a piece of Bitcoin, pick a number, 3-5%, if you're younger, maybe a little more, as opt-out, right? That is your running money. That is the money that is safe from devaluation. Because here's the thing, 1 Bitcoin equals 1 Bitcoin. Will always and forever be true. But we don't price Bitcoin in Bitcoin. We price Bitcoin in other currencies. So if you live in Venezuela, Bitcoin has been the ultimate protection because it's gone nowhere but up. There's never been a bear market in Venezuela. There's never been a bear market in Turkey. There's never been a bear market in Argentina because those currencies have been turned into complete toilet paper, and your Bitcoin has gone up because you price in that currency. Bitcoin in dollars is a little more volatile because the dollar is a little more volatile. But if I believe, which I do, that the dollar will systematically devalue over time, then holding Bitcoin will go up. The other reason is Bitcoin has a built-in increase because of the halving every 4 years, because the block rewards go down, therefore the price has to rise or all the miners will go out of business. So I like Bitcoin long-term. So above Bitcoin, I think Ethereum is quite interesting. Other coins beyond that, I struggle. I do like Avalanche. I think I used to like Solana, but that got caught up in the FTX thing. I do think there are a couple other interesting products. I like Polkadot, I like Cosmos. And ultimately, I think that, so to summarize, if I think about crypto, it's like the internet, right? The internet came along, And all the value was captured by the applications, not by the protocols. The protocols, there are 5. There's TCP/IP, there's FTP for files, there's SMTP for email, HTTP for websites, and www that ties it all together. But all the money was made by the apps. Google, Facebook, et cetera. They extract the data, they sell it, and they make all the money. The cool thing in Web3 is we can now own the protocols. The question is, which ones? So are we going to be single protocol, Bitcoin only, Lightning on top of that, L3s, L4s? Maybe. The maxis would say definitely. And now with ordinals and all this stuff, maybe. Or are we going to have like a protocol stack like the internet? Okay. Bitcoin at the base layer, Filecoin is FTP, Ethereum is like www dot, maybe Polkadot and Cosmos in the middle for HTTP, SMTP, don't really know. Or do we have a bunch of L1s and then bridges across them?
That's interesting.
I actually don't know. And now I'm making investments across all of those potential outcomes, hoping that we get one right, but I don't really know. But because of that, I think everyone needs to own part of this, because Web3 will be bigger than Web2 and bigger than Web1, because networks are not linear, they're exponential. And exponential, I'll leave you just this last simple thing for people to think about. If I take 20 linear steps across the library, I get to the other side. If I take 20 exponential steps, I go around the world twice. People say, that's not right. Do the math, okay? It's actually really simple math, and it's amazing. The power of exponential growth is amazing. So Web 1 was all about the linear connection of people. Web 2 was about increasing the connectivity through Metcalfe's law of all the nodes in the network. Web 3 is about expanding who owns those connections. Content, protocol, all of it comes down to the ownership economy as opposed to the centralized ownership economy. And that's pretty cool.
No, I agree, man. I appreciate you taking the time to explain that. And while you were talking, it made me think about something from when I met you in person, Bitcoin 2021 in Miami, Florida. When you were talking about the Zimbabwe dollar, what's happening in Venezuela and other countries. Do you remember? Because I started walking around the conference, and I started seeing these foreign notes, like bills, laying on the floor, and I thought somebody dropped some money. Then I go outside, and it's like everywhere. Then I realized there's this trash can full. Did you see this trash can? By the way?
Yeah, I remember people talking about this. Yep.
So this thing is full of $50 Venezuelan bolivars, I think is what
bolivars. Yep.
Yeah. And this entire dumpster, huge dumpster, wasn't even worth $20. It had so little value that even the homeless people, which there's a large amount of homeless people in Miami, they didn't want this.
Yeah, it's crazy.
That is insane.
But you picked up a couple, right?
Yeah, I brought a couple home, and then I did this. I recorded the video from the trash can. I was like right by the trash can because it's like boxes and boxes.
Amazing.
Full of it. It was and it was, to me, one of the most profound statements that I had ever seen. Just like basically like this money is trash.
No, it is. Fiat is trash. But look, enjoyed the conversation. We'll do it again sometime. And thanks for reaching out and setting this up. And hopefully, if people have questions or comments, or they'll find me on Twitter, and I'm at Mark Yusko if people care, and or they can send you questions, and we'll talk again.
Yeah, we'll have links for everything that I screen shared, and I'd definitely like to be in touch with you to do a follow-up, because there's a plethora of questions that I still have left to ask you. So I appreciate your time, Mark. Thank you for joining me on today's show, and you have a great one, my friend.
All right. Thanks. Talk to you soon.
Before we wrap things up, I definitely encourage you to make sure you are subscribed here at Rice TVX, as well as my other channel, Rice Against the Grain. And if you haven't already, be sure to give this video a thumbs up, smash that like button, and I will leave you with this. I encourage you, as always, to be a blessing to others, treat people how you want to be treated, be the glitch that you want to see in the matrix, be the change that you want to see in the world. And until next time, practice change.